Garetano is a senior vice president in Brookfield's infrastructure group. And in this role, Mr. Garetano is responsible for the portfolio management of Brookfield Infrastructure Income and is also involved in strategic initiatives for Brookfield's infrastructure platform. Now, prior to joining Brookfield, he held similar roles at Wad Capital Partners, Adams Street Partners, and BlackRock, where he was responsible for delivering alternative investment solutions to clients globally. And Mr. Garetano holds a Bachelor of Science degree from Syracuse University and joins me this morning. Great to have you here.
Thanks, Jane. Thanks for having me on today.
So tell us about the Brookfield Infrastructure Income Fund.
Yeah, Brookfield Infrastructure Income, or what I'll probably refer to as BII, is a continuously offered non-diversified closed-end fund. But what that really means is this is an evergreen offering that's intended to be a comprehensive private infrastructure allocation that provides exposure to both private infrastructure debt as well as private infrastructure equity in developed markets across really 5 primary sectors. This is transport, renewable power and energy transition investments, utilities, midstream, and data. And the strategy is intended to provide ways to access Brookfield's infrastructure capabilities really in a single solution with fund characteristics that we think could be more attractive to individual investors. As the fund takes in monthly subscriptions, we intend to pay a monthly distribution. We potentially provide liquidity on a quarterly basis and an annual 1099 tax form.
So what does the portfolio look like now?
Yeah, this is a portfolio of over 23 investments today that we think really represent high quality infrastructure assets that form the backbone of the global economy. I recognize that when the word backbone is used, what does that actually mean? Think of this as the transport investments that really are helping deliver goods when you order it online, or really ensuring supply chains work around the world. Or think of the utility lines that are helping bring electricity to our homes, or the renewable power that could go through those utility lines, or the natural gas that comes through the pipes to really help us heat our homes, or the telecom towers might give someone 5G coverage to their iPhone or their Android phone that really might be helping them stream this video right now. And the way we've designed the portfolio is that it could be resilient across all market environments. This is a portfolio that has 90% of its revenues that are contracted or regulated with almost no volume or price exposure. And what that means in infrastructure is it's our job to make sure the infrastructure, the service, is available for our customers to use. And then that means we get paid. We're not taking the usage or volume risk or the technology risk in our investments. In most of our investments, we have direct linkage or to inflation. And so our revenues can grow with inflation each year. And then we seek to finance our assets with long-term fixed rate financing to really mitigate any interest rate sensitivity in the portfolio.
So what should an investor expect then in terms of a total return?
Yeah, I'd say infrastructure really is intended to be a stabilizer in an investor's portfolio. Infrastructure is not private equity. It sits at the opposite end of the risk spectrum. Allocations to infrastructure are really intended to provide potential downside protection, potential inflation protection, and really diversification due to the low correlation to other asset classes, whether that be the traditional public markets or even other alternative asset classes such as real estate, really driven by the unique return and risk characteristics of infrastructure assets, and really the ones we seek to invest in at Brookfield. Specific to BII, we're really designing this to potentially be a portfolio that should provide a very stable and consistent experience with returns that could be resilient across market cycles. And so we would really expect the returns to be comprised of approximately half income and half capital appreciation. And the fund's distributions that we intend to potentially pay monthly potentially have some tax characteristics to it.
Where can or even should RIAs incorporate this product into their client portfolios?
Yeah, and that's a really good question, because I'd say I've seen many different RIAs look to implement infrastructure into their clients' portfolios in different buckets. Many have viewed infrastructure as a fixed income substitute. I'm obviously biased as an infrastructure person. I think it's a little bit better because you get that inflation protection, and then a manager like Brookfield can drive capital appreciation. And so you potentially could have a portfolio investment that looks like a lower risk equity investment. Some investors have been making a dedicated infrastructure or real assets allocation, and some investors have had cash sitting on the sidelines, and they view infrastructure as a good way to deploy that cash because infrastructure historically has been less prone to market cycles. And so there's not necessarily a timing of the market, or are we at the peak or are we at the bottom? It could always potentially be a good time to invest in infrastructure. We've seen some potentially sell off some public equities that were maybe a little bit more dividend paying and want that kind of stable, predictable cash flow stream from infrastructure investments with some of the upside potential. And so there's many different ways we see investors and RIAs look to implement allocations to private infrastructure today. I don't think there's any right or wrong. I'm just very excited to see that infrastructure continues to gain momentum, and there's now offerings like BII, which are new and a really good access point potentially for individual investors today.
Okay, Sam, thank you so much for explaining infrastructure in general and what you do specifically. I appreciate it.
Perfect. And thanks for having me on today, Jane.
Thank you.